Well, it's not surprising, again, if you think about how fast this market has recovered since the beginning of this year, that things would pause a little bit and maybe go into a sideways mode. That's kind of was my expectation for this week. I don't think there's anything to be too surprising. I don't think the data was that bad in general. We're not necessarily forecasting a recession, but certainly a growth slowdown. The Atlanta Fed, as you said, downgraded, but they are notoriously underestimating GDP. That's happened consistently. They've been downgrading this quarter, and they're below the consensus right now. So, yeah, I don't think it's unusual, given how quickly we've recovered, for things to pause a little bit right here.
Yeah, I mean, that might explain, Rick, why, the bond market and the foreign exchange market aren't taking it too badly in terms of weak economic data. Both yields and the dollar are up today.
Absolutely. It makes no sense, but it does make sense watching stocks. So, we get existing home sales, we lose the 5 million handle. Actually, again, they revised the slightly under from last month to slightly over 5 million, so that's the weakest since the fall of 15. LEI back-to-back negatives, hasn't happened since the first 2 months of 2016. There was lots of weak data, but Randy's right. The reason we look at it as weak is because for the last couple of years, it's been so lofty, but nonetheless, the rate of change matters. And today's data really hit home with stocks. I think they're pricing right to the data. But if you look at sovereign rates around the world, they were mostly higher, like the U.S. As a matter of fact, I'm pretty sure the U.S. led the way. And I think the reason for that is more the psychology of our Fed minutes, what we are looking at in the future from the Fed, maybe partially what's going on with China, even though that should also impact stocks. And it makes sense to me that there's a separation there sometimes. Remember, we all know that the Fed is very responsive to some of the newest signals in the market it saw at the end of last year. However, there's been many economies that are slowing that have had strong stock markets. And last year, when the data was spectacular, we certainly didn't end the year in a spectacular way. So I think there's a calibration issue going on there.